Welcome, everybody. Really happy to have you with us today. We're going to be exploring TrendSpider's all new AI strategy lab. And I'm so thrilled because we got a really special guest with us today, TrendSpider's CTO, Mr. Ruslan Lagutin, the developer, the creator of the AI strategy lab. And in a few moments, he's going to be walking us through the entire lab, showing us how each piece of it works, offering tips and tricks on how to get the most out of it. But before I pass the mic over to Russ, I want to take a moment and just talk about the why of the AI strategy lab. How is it different from ChatGPT? What is an AI strategy? Why would you want to use an AI strategy to begin with? Understanding these key components, I think, helps bring a little perspective to the entire creation process. So let's start with the big question of how is the AI strategy lab different than a general purpose LLM like ChatGPT? So general purpose LLMs are built for a wide range of tasks like answering questions, writing code. TrendSpider's AI strategy lab, on the other hand, is purpose built for trading. ChatGPT is optimized for natural language, while AI strategies in the lab are specifically trained to analyze financial data and identify trade signals. The AI strategy lab enables users to tailor models to any market, time frame, and trading criteria, defining elements like trade horizon and risk tolerance and target outcomes to create predictive AI models precisely tuned to your needs. Now, the next big question, what is an AI strategy? Well, AI strategies on TrendSpider are all about leveraging predictive machine learning to find patterns in price movement. Machine learning, at its core, is a technology that enables computers to analyze data patterns without needing exact instructions. That is a big key piece of this whole tool. It doesn't require exact instructions. With TrendSpider's AI strategies, you're going to be working with predictive machine learning models. These are tools that are designed to analyze data and identify patterns in market behavior. A model, in simple terms, is a set of data-driven rules that the AI develops on its own by studying past market behavior. So the AI develops the rules on its own, and we as traders don't need to define the exact instructions. With these models, you can train them, you can experiment with different approaches, you can fine tune them to your needs, and that's all done in an easy to use point and click interface that Russ is about to walk us through here in just a moment. Now, another big question, why would you want to utilize an AI strategy? Well, the biggest advantage of AI strategies lies in their ability to uncover patterns and signals that might go unnoticed by even experienced traders. Traditional algorithmic strategies, like you're used to building in TrendSpider Strategy Tester, they demand meticulous setup, right? You got to define your entry and exit criteria, your indicator thresholds, specific technical configurations. This complexity typically requires a high level of expertise in technical analysis, right? So that can make it kind of challenging to design and optimize strategies effectively. So with TrendSpider's AI strategies, we kind of taking that burden off of your shoulders, right? The AI sifts through vast data patterns. It learns to identify criteria that produce reliable signals so that you don't need to master every indicator or setup. And by simplifying that creation process, you're really empowered to explore and experiment, to discover, and kind of most importantly, to have fun with it, play around with it. TrendSpider's AI makes sophisticated data-driven trading accessible to all, letting you focus on the strategy rather than the setup. Now, the last thing here before we get to Russ, how are AI strategies different from algorithmic strategies? Well, AI strategies differ from algorithmic strategies in how they analyze data and approach rule creation, right? They offer a range of advantages. The first is that they are learning-based versus rule-based algorithmic strategies. So AI strategies develop their own entry criteria by learning from historical data, while algorithmic strategies rely on predefined rules that you set, right? As a trader, you're setting those rules. AI strategies can also uncover deep, complex patterns in data that fixed algorithmic rules might miss. So they can detect relationships that aren't easily captured by rule-based approaches. So with that understanding as our base, I am going to pass the mic over to Russ. He's going to walk us through the development of an AI strategy in the lab. So I'm going to stop sharing my screen here. Russ is going to take this thing over, and we're going to get started kind of digging into the lab. Russ, good morning. Thank you so much for being here with us, man. It's a pleasure to get to have you as our very special guest today.
Morning. Hey everyone. So before I start, I wanted to add a few things to what Jason just said. First, it like AI uncovers patterns. This is definitely true, but still, you got to remember that it still takes a trader to create an AI strategy. You do not need to be a machine learning engineer, and the more you know about how markets work, the greater are your chances to create something good quickly. AI Strategy Lab is a good tool for building cheap and quick experiments and iterating through your models. Once you create an AI strategy, you typically go through a number of steps. There are four, and if you're just starting, then it would be actually a good idea to just click through them. Just click next, 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 and see what happens. The odds are you will see something interesting. We have designed it to be fairly easy, but still the thing is deep, and you can go as deep as you want, or you can just click through. The first step when building your AI strategy is defining the market data to train your model at. Defining market here is gonna impact a few next steps of building an AI strategy. You can use one market or multiple markets when you design your AI strategy. Market is a combination of a symbol, time frame, and a date range. In general, whether you want to use multiple markets or not depends on what you believe as a trader. If you believe that you're after a strategy which is uncovering universal patterns, patterns which are universal to multiple markets, then you might want to go with multiple markets. If you believe that markets have personality and you would rather uncover patterns which exist on a given market, then limit yourself to one market. I would suggest everyone to start with one market only, because the more markets you have, the more expertise is necessary in order to build a model which will be meaningful and which will backtest well. When you select a date range, there is no right or wrong thing to do here, and there are a few schools of thought. Uh, I will showcase them, but again, there is no right or wrong thing. You can just go with the default selection, but in general, by default, we select a bunch of recent candles, 4,000 candles in this case, on a given market. This means that we'll use data from 2022 to up to now when training your model. Model AI will have access to this data when discovering patterns. This means that it's going to have a chance to discover patterns which have emerged recently because it's using data up to now. This is one school of thought. Going this direction is all right, but if you do that, then you will not have a chance to backtest this model on unseen data using recent data because all the recent data went into the machine learning. So it is just a thing to be aware of. Alternatively, you can select data in the past, like that, an example. You skip or one recent year of data and go with that. In this case, you will have a chance to utilize recent data for backtesting later on when you will have the actual model trained. But your model will not have a chance to discover patterns which have emerged just recently, like I don't know, just this past year. When thinking of these date ranges, you can also ask yourself whether you want this date range to represent one kind of a market, an example, bullish market or bearish market or sideways. Or maybe you want to have this date range to cover diverse states or markets. Again, it depends on what you're after as a trader. If you're willing to limit yourself to bullish markets only, then it's totally okay to select a date range or two date ranges or like three, which represent a good example of a bearish market, bullish market on SPY 1 hour. In which case, your model will be trained for being awesome on bullish markets. This means that you will have to backtest it, keeping in mind this model was built for bullish markets, and you will have to deploy it, keeping that in mind as well. If you're seeing that market is not bullish right now, then it will not make a lot of sense to deploy a model which is purpose built for bullish market. In our current video, for our current case, I will just leave it as it is. It's gonna cover different states of SPY. It's not like clear bullish, clear bearish. It's diverse.
Real quick question for you, Russ.
Yeah.
Do you have any thoughts on minimum range periods that should be utilized,
I
or
don't.
maximum?
I don't have a clear answer. Typically,
Okay.
you in machine learning, you typically want to have as much of data as you can have, like as rule of a thumb. But at
Yeah.
the same time, it also comes at a price. And when applied to trading, you might also think that there are patterns which come and go, patterns which emerge, persist, and then dissipate. In which case, I'm not sure if there will be a lot of sense in backtesting, like in building your model on like 20,000 candles, an example.
Right.
It might make sense depending on what you do and why. But the more data you have, the bigger is the danger of your model becoming overfit.
Mm.
So it is just a matter of balance, just like when you're backtesting an algo strategy. There is no right or wrong thing. I would say the only thing I can say clearly, you do not want like, I don't know, 300 candles here. It's very unlikely that this data set is going to contain enough examples for model to learn
Yeah.
anything meaningful. You don't want too few candles. We have limited history range for AI strategies by to 7,000 candles, I believe. And it's okay to max it out. It's okay to go with 7,000, but we don't even let you to select 20, an example.
Got it. So you think that there is just as much validity in analyzing a chart and saying, from December 2018 to February 2020 was basically a straight up bull market. That's the type of market that I want to train my data on. That's just as valid as kind of just selecting any random section of the chart and using that as your range.
Yes, it is.
Yeah.
And then the choice is yours because if you are going with a diverse set of market conditions for one AI model, in general, it's going to be harder for AI model to discover meaningful correlations because market is very much diverse. Things
Right.
change, and if you're selecting clearly bullish market, it's going to be easier for this model to discover something. It's a matter of a balance between what you are willing to do as a trader and what you expect AI to do for you. In general, when you design an AI model, an AI strategy, one thing which is general in this case, you got to be humble. Do not expect this thing to just be very sharp and very precise. Machine learning is a very much complex domain. Trading is a complex domain, and it can actually build beautiful things for you. But don't try to be very precise. That's what I'm trying to say here, I guess.
Got it.
All right, so we'll select this date range for SPY 1 hour and just move on. Next step is defining your goals as a trader. And before I dive in here, I will switch to my chart and explain the idea of why some candles are yellow and why some candles are not yellow. So the idea of machine learning in trading is, well, it is a fairly old idea, and there are multiple ways to approach that. We are approaching machine learning in trading in a very specific way. We have intentionally limited ourselves to fixed RR strategies. So AI strategies you designed on TrendSpider, They produce signals with some level of certainty, and those signals are deemed to have fixed reward to risk ratio. That's why when creating a model, you gotta specify your take profit and stop loss. This also implies that AI strategies give you entry signals. They don't even have to give you exit signals. It's up to you. You can use profit, take profit and stop loss. That's what they are meant to be. I will cover this part for backtesting later. Provided that you specify take profit and stop loss, we do have TrendSpider highlighting candles in the past where you would want to have a signal according to your take profit and stop loss. That's how AI strategies, that's like one aspect of how AI strategies are different from algo strategies. In algo strategies, you tell computer like, here is what you do and when. When training an AI model, you tell computer, here are examples of signals I wanted in the past. Go figure it out. There's a very different ways to approach trading. So let's say I have a take profit of 2% and a stop loss of 0.5%. Let's check out a few candles and see whether we wanted a signal in the best. Like let's say we have a candle here, this one with the red arrow. Did we want a signal on this candle or not? Well, provided our profit target and stop loss, no, we didn't want a signal for this candle in the best because yeah, market was moving up, kinda. It never hit our profit target, never hit our stop loss either. It just anytime you train an AI strategy, you specify take profit and stop loss, and also you specify your prediction horizon. So you want your AI strategy to tell you when the odds are in your favor that within the next X candles, let's say 40, price is going to hit your profit, take profit, and is not going to hit your stop loss. That's what these yellow candles are about. And let's just move on and see another example. So this candle is not a signal because within my prediction horizon for 40 candles, price did not hit my profit target. Here is another example. This candle marked yellow, it should be a signal because within my prediction horizon, price did hit my take profit and did not hit my stop loss. So yes, I wanted a signal here. This candle should be yellow. This candle should serve as a legitimate example of a good signal when creating my model. This candle here should not be a signal, or should not have been a signal, because price hit my stop loss. I don't want that. And price never hit my profit target, so there is no reason for it to be a signal. And applying the same idea here, you can see that some candles are yellow, some candles are not yellow. I will not dive too deep, but yellow candles are where you, according to your take profit and stop loss and prediction horizon, you wanted a signal in the best. Yellow candles are going to serve as examples of when did you want a signal for AI to deal with. You can play with your parameters here and defining your market. In this case, we're dealing with SPY 1 hour, has direct impact on what do you do here, because you cannot, like, different markets are different in how they move, in what is a typical thing for them to do. An example, for SPY 1 hour, you can still get away with 2.5%. You will have fewer signals. An example here, for 2 months, you would have had 18 signals ideally. That doesn't look like enough to me. And you can be more humble. You can set up your take profit to be tight, in which case you will have more signals. In general, when defining your prediction target, you do not want to be too restrictive because especially if your training data set covers diverse types of markets, you should not expect AI to be very precise. You want to be tolerating, if I may. Do not expect AI to discover unique patterns for every other case. Because an example here at the bottom, well, this, I don't know, this a trend emerging. You might treat this one as a bounce or reversal, and some things are just continuation. Those are different cases from standpoint of trading. AI does not distinguish that. It's not even trying. It's gonna try to uncover patterns and relations between market conditions, between what you define as inputs, which we'll see later, and between whether that should be a legitimate signal or not. So I would say let's go with the default right now. We'll go with a take profit of 1.5% and stop loss of 0.5%. In this
Would
case,
you, Russ, sorry to interrupt, but
yeah,
would you
sure.
say that the key thing to keep in mind when you're setting your prediction goals is can the asset that you're building the model for, are those reasonable goals within the candle period that you define? That's kind of like the key thing to keep in the back of your mind, whatever you decide to input for these particular inputs.
Exactly. That's what you're after here at this step. You want to define what is reasonable for a given market. What happens often enough, and that's what you're trying to do here, indeed.
What's
Because
the, oh, sorry, go ahead.
there are multiple ways to hit what risk ratio of 3%. You can go with this combination of take profit and stop loss. You can change these numbers while still having RR of 3. It is your responsibility as a trader to define what is reasonable for a given chart.
And then very, very briefly, can you talk through the at all functionality? How the different differentiations there?
Yeah, I was trying to avoid that, but
Oh,
let's do it.
okay. Sorry.
No, I mean, let's do it briefly. Why not? So this option comes down to this idea of being restrictive or being flexible with your AI. In general, you don't want to be restrictive. As I said, you got to be humble. And for this yellow candle, an example, you can see that price hits your take profit and never hits your stop loss at all during your prediction horizon. That's a good and simple case. It's like it's easy to see. In some cases, I'm not sure if I will find these here. If I'll find these quickly, I won't. So in some cases, you would have your price action doing something like that. So let's say your price action would hit your take profit and hit your stop loss after that. Uh, and then as a trader and as a person who is designing an AI strategy, you can decide whether it's okay or not. Is it okay for you to get a signal in a case like that when price hits your take profit and then it hits your stop loss after? It's really hard to predict markets, and then for AI models, it's that's still not a silver bullet. Those are mathematical models going through machine learning. So it is up to you as a trader whether you want your machine learning model to have hard living, dealing with examples like that, trying to distinguish from a case when price hits your take profit first and hits your stop loss till next. Or you might want to be easy on your machine learning model and say, no, that's not a signal. If price ever hits my stop loss during my prediction horizon, I don't care if it hit take profit at all. If it hits my stop loss, that's a no. It's this option regulates how flexible do you want to be with your model, and default choice is not being flexible. If price hits your stop loss, even if it hits take profit before, this signal is discarded. That's the default option. But if you want to be flexible, you can be flexible. And in general, that gives you more signals. This gives you your AI model more data to learn at. But at the same time, it makes the goal of machine learning harder
Got it.
because it's dealing with diverse cases, with cases which are different in their nature.
Okay. Got it. Cool.
All right, so we'll go with the default selection here as well. We'll go with this set of conditions, which gives us RR of 3. Knowing that our model is going to be producing signals with RR of 3 is very important because we know mathematically that with RR of 3, there is a certain minimally viable win percent for your strategy. In example, if your RR is 3 and your win percent is 10, it's just a matter of time for one your strategy is going to go to 0. And if your RR is 3 and if your win percent is 30, well, that seems like not bad. That's definitely above the water mathematically. Having fixed RR is a very important thing. That's why I'm repeating that. And we'll get back to this RR when analyzing results of machine learning. But for now, let's move on. Next section is the most technical of them all, I guess. That's where you select your AI model type. Machine learning is a vast domain, and multiple machine learning model types exist out there. There is no such a thing as a good model type or bad model type. Model types are different in a way they work. All the AI models, those are tools, and each tool can be good for one thing and not really a fit for another thing. And on TrendSpider, we have implemented 4 model types. You can see them on my screen, and they are very different in how they work internally. As a trader, you might want to dive deeper or not, I don't know. But as a trader, you should know that these 4 model types are primarily different in how powerful they are. And there is a caveat in this word, powerful. Machine learning models can uncover correlations, they can uncover patterns. However, they cannot know which correlations are real, so to say, and which originate from noise, from random circumstances, from coincidences. There are a few approaches to avoid that, but in general, machine learning model will gladly accept a pattern if there is a legitimate relation without really knowing that this pattern was just a coincidence in the past, which is never going to reproduce in the future. This thing cannot tell that. So the more powerful the model is, the more complex relations it can uncover. And well, the more it's capable of discovering really hidden patterns. But at the same time, the more it's capable of learning from patterns which are random, which are coincidences. So naive Bayes is the simplest model of them all. Logistic regression is kind of comparable. Those are simple models. Key nearest neighbor is very powerful model, and random forest is much more powerful than K nearest neighbor. The choice is yours here, and it depends on whether you know what you're doing with machine learning or not. If you don't really know what you're doing, if you're just trying and playing with the tool, trying to get into this world of AI at all, I would recommend going with a model type which is fairly powerful. So let's take KNN, start from it. And then you will have to prepare yourself for a lot of experiments. You will have to train models, assess their quality, which we'll do shortly. Then you will have to backtest them, probably discard most of them, try again, crossbreed models and stuff. So if you don't know what machine learning is, go with the model which is very powerful. Don't take random forest right off the bat. Take KNN and run with it. If you know what you're doing, if you are familiar with machine learning to some degree, with the idea of machine learning and feature engineering and overfitting, if you're familiar with these, do prefer simple models. Take logistic regression, take naive Bayes, and then spend most of your time designing your model inputs, which they call feature engineering in machine learning. So to recap that, there are multiple model types. They're different. Some of them are more powerful, some of them are less. If you don't know what you're doing, take a very powerful model and prepare for grinding. If you do know what you're doing, take the least powerful model and prepare for different kind of grinding. Means feature engineering. But again, if you are into machine learning, then feature engineering is a thing which you're going to be good at. So that's how it goes. We'll go with KNN. One thing I will mention before moving on is that anytime you run machine learning in TrendSpider, we don't just train one model. We do train a lot of models under the hood and just select the best one for you. Every model type on this list has parameters, and There are a lot of them. For KNN, we uncover three. There are actually more. And if you go with the default selection, just select KNN, we're gonna apply the approach which is standard in the world of machine learning. That's like grid search optimization. We're gonna take every parameter it supports, like number of neighbors, wave function, algorithm. Well, we're gonna train model for every set of parameters. Like an example, we're going to train a model for number of neighbors of 5. We're going to train a model for 10, 20, 30, and so on. The same here. We're going to train a lot of models and then pick the best option for you. So if you're not into machine learning, do not try to fine tune your stuff. Just go with the default option. And then once you get better, once you dive deeper into the ideas of machine learning, then you can get to fine tuning. I recommend everyone, if they're just starting, to go with KNN and no fine tuning at all. Luckily, that's the default option. So just click next. And now the most interesting piece begins. In machine learning, the thing they call feature engineering is the most complex part of it, I guess. And it's also a make it or break it kind of a thing. Model inputs, like every machine learning model, needs to base its decisions on something. It cannot just take the world, all the circumstances in the world into account and then spit good predictions. Unfortunately, that's simply not doable, and reasons for that they exist deep within domains like overfitting and computational resources and stuff. But in general, you should define what your model should pay attention to when making predictions. This part is resembling algorithmic strategies to some degree. In algo strategies, you get to decide which indicators you want to use and how. Like, I want to use short EMA and long EMA, and I want to enter when there is a crossover. That's the algo way. With machine learning, the way is different in a sense that you define which things, in your opinion, can have anything to do, something to do with signals you're after. So you don't need to specify how to use these. You need to just call names. And with powerful model types like KNN, like random forest, these models can be forgiving. This means that if you list things which have nothing to do with the actual signal, that might be all right. They might just uncover, okay, this indicator has nothing to do with the signal, I'll just ignore it. So that's yet another reason to go with fairly powerful models in the beginning, because they can forgive you some mistakes. If you give them indicators which have nothing to, like, have no predictive power, have no correlation with signal, it's just going to ignore it. It's not going to necessarily break the entire model. While in algo strategies, that's what's going to happen. Designing inputs. Inputs are things, again, which model is going to use to learn correlations and relations. Designing inputs is hard, and this is the hardest part of machine learning, probably. If you, let's put it this way, depending on whether your inputs have any predictive power at all or not, it can make it or break it. If you have inputs, if you select inputs which legitimately have nothing to do with your signals, then, well, even the best type of a machine learning model out there, like spend millions on processors or video cards, whatever, it will not help you at all. If, like, garbage in, garbage out, there is no predictive power legitimately, well, model is not going to help you. You won't be happy. And then, at the opposite, if you design inputs which legitimately do have something to do with signals, then the odds are even the most simple model will work for you. Designing your inputs is hard, and we do not expect everyone to just dive in and start, like, thinking, okay, should I use RSI, or like, should I use MACD, or whatever. We have tried to make it easy on you, and we leverage large language model here, so you can just give a hint to a large language model, like, say, I want to, like, please focus on identifying established short trend continuation. So you're trying to limit it to, as a trader, you're thinking that focusing on established trend continuation is a good idea in this case. So just tell it that. Then large language model is gonna know what kind of a model you're trading. What is the market? What is your take profit and stop loss? It's gonna know it all, and it's gonna suggest your inputs. You can see a few examples here. Those examples are just illustrations on how specific like that or how broad like that you want to be. You can be like, use RSIs and even name length. Well, it's going to do that. Or you can be like, use momentum indicators without really specifying which ones and how. Let's try this one. Once you run a request like that, large language model is going to generate a bunch of inputs for you. And in general, as a trader, you might think that inputs equal indicators. That is the case, but inputs are not limited to indicators. That's very important. You can see that language model has just proposes a whole bunch of inputs. And an example, first one is RSI, RSI 14. That's nice. Why not? And you can see quite a few indicators here. But then here is a thing which is looking different. That's a formula. And formulas are where the real power of feature engineering is. I cannot claim that there is no alpha in designing models using conventional indicators. If only because for the vast majority of machine learning model types, it's not like you're not after one silver bullet of an input. You are also after combinations of inputs. Machine learning models are going to uncover relations between different inputs. And then the set of your inputs is very much important. Sometimes a model will just default to using one input or two. We'll see it soon, which is okay. But combinations of inputs are important. And in this case, this input is a formula, which you can see it's operating with a thing named A. What is that at all? Every input of your model has an ID or like a name, however you call it. There is an input A, which is RSI 14. You can see it here. There is an input B, which is CCI of 10. And formulas can refer to other inputs, including other formulas. So this particular formula refers to input A, it refers to RSI. And it's going to produce mathematical difference between RSI right now and RSI 5 candles ago. So this is an approximation of momentum of RSI. Provided that RSI is an oscillator, means that it has a boundary, this approach might be viable. Another formula is different. It is referring to E. It's like rate of change divided by rate of change 3 candles ago. That's interesting. And that's interesting because large language model would oftentimes suggest you things which you wouldn't even think about. In general, if you design your inputs manually, and you only should do that if once you have tried language model first, because you should just try an experiment and then you can go deeper. Once you try to design your inputs manually, there are a few principles you want to stick to. I will not cover them right now, but in general, once you try an indicator as an input, what you want to do, you try this indicator with different length, different set of parameters, and then also try momentums of indicators, like try rate of change of RSI, try rate of change of Bollinger Bands, why not? And formulas is how you do it. Formulas are very much powerful. And formulas are especially going to be valued by people who are into machine learning.
Russ, a quick
Yeah.
question for you. In some cases, we don't see it here, but in some cases, you'll get an input that you cannot use for training, like it's not selectable. Can you explain? Can you explain
sure.
why that would be the case?
Sure. So you can let's just create an input like that. You can see that I have just added an SMA here, and now the checkbox used for training is off, and I cannot even set it on. This means that simple moving average will be computed, but your machine learning model will not use SMA for when training. There is a reason for that, and the reason for that is that SMA, just like a lot of other indicators, like an example, unbalanced volume, it is an unbound indicator. Its value is arbitrary, and its value, like the odds of its value repeating itself in the future, those are, well, minor, almost zero, especially for an unbalanced volume, which is just growing. So a whole class of indicators which are not oscillators, cannot be used directly in machine learning, simply because it does not make any sense from standpoint of machine learning. Like in theory, you could train a model like that and you would get a beautiful chart here, but then once you go to backtest your model, you will uncover, well, it's not going anywhere. Because values of SMA are not going to reproduce themselves too often. So this does not mean, though, that SMA is useless for machine learning. SMA might be very much useful, but if you want to use SMA, you want to apply some approaches of feature engineering for machine learning. An example, like, okay, I cannot use SMA. What can I do? I can use distance from SMA to my close price. Well, that's better. That's still unbound, so it's not ideal. It's going to be better this way. It's going to be a logarithm, but in general, uh, unbound indicators can be useful if you use them in formulas. I'm really hesitant to dive deeper right now because the topic is vast. But if you want to use Bollinger Bands, SMA, EMA, VWAP, whatever unbound indicator you use, you should transform them into either how they relate to price action or how they relate to themselves. An example, there are multiple ways to benefit from SMA in your AI model. If you believe that where the price is versus SMA, if you believe that this part carries a signal, then that's what you're going to do. You should just use an input which is a distance from close price to SMA. If you believe that slope of an SMA is what carries a signal, that's what you're going to do. Just do like that. Do change percent of your SMA. If you believe that the distance from SMA to its own mean value is what carries a signal, then you might want to do that. Which in this case, which is going to be a distance between K, which is an SMA, and SMA of K. You get to refer to documentation. I have explained most of these ideas in there, but that's my lengthy, short answer for why you can't use an SMA.
Just real quick for everybody that's in attendance, Ryan has been posting links to knowledge base articles for you guys as we've been going through each section. So you can go into those knowledge base articles that Russ just mentioned and kind of dig into some of these concepts a little bit deeper once we're done with the presentation.
Right. So we'll stop here with inputs. As a recap, designing inputs for your model is typically where you spend the most your time in this section, in section number 4, and you either do that manually or you use large language model. And I would recommend everyone to play with large language models a lot, because I've seen it producing beautiful things. And the most interesting part about it is that if you don't really know what you're doing, again, if you're not into machine learning yet, then it can produce things you wouldn't even think about. So it gives you a way to experiment, and experiments in AI Strategy Lab, those are quick and cheap. It's easy to experiment. It's easy to produce 10 models within, I don't know, 10 minutes, and then see what happens, and then take it from there.
Just on a general question, kind of similar to my question about the date ranges, do you find that there are any, like the amount of inputs that you utilize, is there any advantage to using less rather than more, or is it just whatever the model spits out and is what it's going to create off of?
Yeah, that's yet another topic where unfortunately I will not give you a precise answer.
Yeah. Okay.
In general, you do not, like, again, if you didn't design your input accurately and didn't spend a lot of time building a custom indicator for it, an example, then well, like one or two inputs probably will not be enough. And then the more inputs you have, the more you endanger yourself, your model, into learning random noise. I'm sorry, I can see a question in the chat. Somebody's into machine learning. Apparently, somebody's asking whether we normalize our thing, whether we normalize values. Like, yes, we do, and like we do use min max normalizing when training models. And well, normalizing is yet another aspect. Like, yes, we can normalize SMA into 0 to 1, but what is the meaning of it? All right, so let me proceed now and let's create a model. Once you start training, you have a new tile here on your screen, and it's going to take a while. It depends on the model type. Time for training, time it takes for us to train a model, depends on a lot of factors. Depends on what is the model type, depends on how many inputs do you have, depends on what is your training data set, like how large is your training data set. We don't necessarily need to wait for this thing to converge. Oh, there we go. Check it out. It just did converge. And now, once you train your model, it's time to assess what you're looking at and decide whether this model is promising or not. Like, what do I do with it at all? That's your next step. You got to understand what machine learning has trained for you. In this case, I will start from this chart at the top right. This chart, we have tried to simplify a lot of things here. And this chart is one place where you decide whether your model is looking promising or not from standpoint of machine learning. So in the world of machine learning, people operate.
Really, sorry to
Yeah,
interrupt, Russ. We just can't see your cursor, so I want to make sure everybody understands what you're referring to here.
I'm referring to this chart at the right of my title.
Perfect. Thank you.
Yeah. Thanks. That's an important thing to know. So, in the world of machine learning, they operate with an idea of how good or how precise your model is at predicting signals, at predicting whatever you want it to predict. That's slightly different from how you approach things in trading. In example, in trading, your consequences of missing a legitimate signal are different from consequences of taking a signal which was not legitimate. Consequences of entering a losing trade are different from consequences of not entering trade. So these things are not symmetrical, so to say. So you got to remember that when analyzing this chart. This chart has confidence level as its vertical axis. The vast majority of machine learning models and like out there, and 2 of 4 on TrendSpider, those can, when producing signal, these models can tell you how confident they are that it is going to be a legitimate signal. So it can be like, well, in my opinion, with a chance of 46%, that's going to be a good signal right now. So you got to enter. That's what confidence is about. Models can have different levels of confidence in their signals. And then horizontal axis is win percent. So on my chart right here, there is a circle with the number 13. What it tells you is that if you say your model like, hey, give me signals, but only give me signals which you're 36% confident or more, then this model would have given you 13 signals at your test data set, and win rate of these 13 signals would have been 33%. You can see that this circle is green. It is green because it is placed in an area of win percent, which is more than enough for your RR. For my RR of 3, I need at least 24, if I remember, 24 or 26% of win in order to stay flat when trading. This green circle is in green area, and it's green because win percent is sufficient by a margin. We have selected margin from our experience. It's probably 7%. I don't remember from the top of my head. In general, you can see 3 areas on this chart: red, orange, green. Red area is a no-go area. This is an area where win percent is below what is mathematically required for your RR. The orange is, well, what is above what's mathematically required, but it's a typical thing, like you deploy a strategy and your numbers degrade or change once you forward test. So orange area is an area of, in my opinion, of uncertainty. Like, yes, it is mathematically above minimally required win percent, but is it going to persist once you start forward testing? That's the question here. And then green area is where win percent is greater than minimally required win percent by a good margin. Uh, you can see on my screen that charts like that can look very much different, and analyzing charts is how you save your time, because the next step is typically to go and backtest a model. Backtesting is not going to take a lot of time, but backtesting will take some. In some cases, you don't even want to go backtest. Like, check out this one. This chart is not looking good at all for a lot of reasons. In general, it tells you that this model couldn't produce any good win rate on a test data set. And the more confident you want this model to be, the worse is the win rate. So the more confident you ask it to be, the more confidently it gives you bad signals. So this model is a no-go. There is no reason to backtest it even. And a healthy picture would look like that. This one is a good one. You can see that the more confident you ask this model to be, the better is the win rate of signals it gives to you. Like, the less of signals you get, certainly, that's to be expected, but win rate is going better and better. That's an example of a healthy picture. What we have here is not an obvious no-go, but at the same time, it's not very much promising. You can see that we don't have like a lot of circles in the green area. We need to go with confidence of 39 or above to get good signals, and then we'll get like 13 on a test data set. That's not a lot. So what I would do with a model like that, personally, I will build up on it. I would take it from there. And taking it from there, in this case, means playing with inputs, doing some feature engineering. Check out this picture. There is a list of inputs. There is a list of inputs of my model here. And you can see that there are labels at the right. Those are importance labels. Those labels tell you how much of attention did this model pay to this particular input when deriving its conclusions. So you can see that this model has managed to produce some good signals, not a lot of them, but at least some. So what I would do in this case, I would discard inputs which are not really being used, like this one, input I. Model like uncertain means that the odds are it's not being any use at all. So I would discard inputs which don't make a lot of sense, like G, B, J, and then I would add more inputs like the one which makes sense, like MFI. I would add MFI of different length, an example. I would try momentum of MFI. So let's do that. Let's discard input I, this like the last one, input J. Let's discard B, and then let's do more of. Oh, sorry, that's sorry. Let's do MFI of 10. Let's try MFI of 21. And let's try momentum of MFI. So that's 1 candle change percent of MFI 14. Let's train a new model. We're training a new model on the same data set, just like here, with same signal parameters. RR3 with take profit and stop loss, just like this one. So those are, these two models are going for the same goal in same circumstances. So you can actually compare their results. Let's wait for a second and see what happens with this model. And now you can see, like, yeah, nice. This kind of reminds me of this idea I spoke about a while ago. The idea is that it's not about one single input. It is about combinations of inputs. So now this model is bad. This model is consistently bad. You just it's not going anywhere. There is no reason to backtest it even. Because again, the same picture, the more confident you ask it to be, the worse signals it is giving to you. I would just discard this particular model. I would just drop it. I wouldn't try it again. I wouldn't build up on it. I will just proceed with other kinds of experiments. We'll see experiments later. Now, let's see, what do you do if you've got a model which is looking not bad? Let's put it that way.
Real quick before we get into this, Russ, I'm just curious. Obviously we're seeing 9 different models here. The ones that have the green sections all have the go back test label.
Mhm.
Is there a certain look that's like the most appealing to you of these? They are all saying go back test, but they all look slightly different. Would
Oh, yeah.
you like, if you had to pick the one that you would like focus on of these, what would you be looking for? Why would you be choosing that one?
Yeah, of the ones on my screen, I would pick this one.
Okay.
There is a big section in our documentation explaining how do you assess that. I cannot feed that into our current format. We're gonna run out of time.
Sure.
But in general, you want this chain of dots going from bottom left to top right, like that.
And the
And
luck.
you want as many of them being green as you can.
Got it. Okay.
All right, so let's take this model and let's take a next step. The next step with the model is to actually backtest it to see whether this model is good for forward testing at all. When we run machine learning, we do apply this standard approach of machine learning. When the data set you provide under the hood, it's being divided into 2 pieces. One piece of your data set is being used for training. Another piece, this is a test data set. It's not participating in training. It's participating in giving you this chart. So there is a layer which protects you from overfitting already. Because you're seeing this chart produced on test data set, not on the data set which was used in training. So I have specified data from June 2020 to November 2023. Under the hood, we took, like, let's say 20% of this data set, less 20%, and we did not use this data when training your model. So there is no chance for model to be extremely car fit to this training data set. Unfortunately, there is still bias. You have your training data set, you have your test data set, and when optimizing models, we do use this test data set when assessing quality of a model. So there is a bias, unfortunately, still. And your next step, if you have a model which is looking not bad or good, you get to deploy it and you get to backtest this model on the data this model has never seen before at all. We're going to do that. If you want to backtest a model, you need to deploy it, and deploying means exposing this model into TrendSpider. When deploying, you give it a name. That's the name you're going to refer to your model from within TrendSpider. So I can deploy my model, and we're going to go into the platform and see what happens. First thing I would do when deploying a model, I would add it to my chart. I would add it to my chart to see the signals. And then when you deploy a model, we automatically create a strategy for you. Yeah, there we go, by the way. Here are the signals this model have given to me. And every signal out there, it has a confidence level of this model. Like an example, let me zoom in. An example, the model is 63% certain that this candle is a legitimate signal, but like 77% here, but only 57 here. It really depends on what you're after. You might take them all. You might demand signals with certainty of 70 only. You should derive this knowledge from the chart we've seen, from the chart in the AI strategy lab. But now let's go back test. This is the strategy which had been created when deploying my AI strategy. And you can see that this strategy is a fixed RR strategy. It already has take profit and stop loss, which you specified when training. It also has the same time frame. And please pay attention to this red record, to this red line. We have tried to make it very prominent, like this one. Never backtest AI strategies on their trained data set. because results which you're going to see are not representative to anything. Results you're going to see are going to be a direct product of machine learning curve fitting the model as much as it can. So do not backtest your AI models on their training data set because results are going to be misleading.
Let's also like double click on that and say do not include the training data set within like as within a bigger range of the candles that you're back testing on. If you train from started 2020 to 2021 and you back test from 2018 to 2024, your trained data is included in that back test still, even though you're back testing on a much vaster data set than you
Yeah,
trained on.
I mean, we might see this model we are currently looking at. This model is not very good. Its picture is not horrible, but it's not the best one I've seen. So it means that maybe it didn't really do a great job of even curve fitting itself into the training dataset. It depends. But here is the result of backtesting on the training dataset. That's looking good, but again, it is not representative. Do not do that. What you want to do is backtest on a data which was, oh, sorry, which was not a part of your dataset at all, of your training dataset, like that. So this is a result of backtest on the data this model has never ever seen before. And this is a thing you can trust because there is no bias here anymore. A model has not seen this data. If you're seeing this picture being promising, then it is a direct equivalent of you designing an algo strategy and seeing a good backtest. Your next step depends on what you would do personally as a trader. Like if you're feeling adventurous, you can launch a trading bot right now and have it actually trading using webhooks. Or you can run a forward test, which will just send you messages like, hey, this strategy says you got to enter. And then you either execute or paper trade, whatever. Like, it's up to you. But personally, from here, I would launch a forward test. You can also see from this backtest that you shouldn't expect a lot of signals from this model, which was kind of easy to see on our chart within AI Strategy Lab as well, because you've seen that there were small numbers, like 13 signals on a dense data set. So if you deploy this model, then don't expect a lot of signals. Another thing I would say from this backtest, and you should analyze this backtest just like any other backtest. I have only had two positions in my backtest. I cannot trust these numbers at all. Sample size is non-existent. So I would not proceed with this strategy if I take all the circumstances into account. I would not proceed with this strategy because it's producing too few of signals and I cannot assess its quality on an unseen data. I can go deeper. That's another way to go about it. You can go into the past, like to the left from the training data set, so to say. This way you will have more data. But then the question is whether this model has captured pattern which did exist back then or not. It is like you never know. And you can see here are our backtest results. That's something different. At the same time, still sample size is non-existent, only 12 positions. So I wouldn't go with this strategy personally at all. Now I know that we are running out of time. Let me cover two more things. Once you go this route and backtest your strategy and assess like whether it's good or not, what do you want to do with it, you typically do want to keep on experimenting. You want to produce more models, and you can either go the same route we went, just create a new model, click next, 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 play with large language model and see what happens. Or, and there is another way to go about it. You can take a few models you already have, and you can crossbreed these models. Crossbreeding models produces new models of the same type on the same market with the same parameters of signal. Uh, it Crossbreeding models uses different inputs. It takes inputs from one model, takes inputs from another model. It analyzes whether models are good or not, and if models are good, it takes most important inputs. It creates different combinations of inputs. It applies some typical approaches of machine learning, feature engineering, like mean extraction, like variance stabilization, like different types of approaches. And then it produces new models for you. Crossbreeding is an easy thing to do because like, you just click and you have some new models. It really depends. Crossbreeding is going to produce anything from 1 to 4 models. You cannot predict that, but check it out. We have just produced a bunch of models using crossbreeding, and once trading converges, we'll see what's in there. And now, while we're waiting, we can also try another thing. So here is a model we have just trained today, right? You can try other model types. Uh, this is more of a gamble, frankly, but it just produces, it takes the same market, the same inputs, all the same, and it just tries all the other model types we have. Logistic regression, random forest, naive bias, it just produces them. And while I was talking, here are the results of crossbreeding, I guess. Yeah, these ones.
One of those models, the KNN model in the middle, top middle, looks totally different than the other models. Just straight vertical
This one.
signals. Yes. What is the how is that result occurring?
That's a question I cannot answer without diving really, really deep.
Okay. Okay.
But the reason for it here is like personally, if I were to guess, machine learning is still black boxes. If I were to guess, that's due to low amount of neighbors here. That's a result of optimization on the background. So it has decided that it's the best case. But the lesser neighbors you have for KNN, the more clunky or like steppy picture you're gonna get. If you have more neighbors, then your picture is gonna look more complex, like this one example.
Okay.
So you can see that crossbreeding has produced some models, and again, none of them, unfortunately, are very, very exciting. None of them are. Some of them are just straight bad, like an example, these two. But crossbreeding is a legitimate approach, and I have seen it working when you start from designing a bunch of models manually with large language model inputs, and you use very different prompts for large language models. Like one prompt would be use momentum, another prompt would be, I don't know, focus on RSI, another prompt might be focus on price action, don't even use any indicators. So produce some models, like, I don't know, 3, maybe 5, using this large language model approach, and then keep on crossbreeding good models. I have seen this approach giving good models in like second, third, fourth generation. So that's an interesting way to go about it, and it is a very good way in case if you do not really know how machine learning works. This is your way. Design models using large language model inputs, train them, crossbreed good models, and see how far you can take it. That's it, I guess. We are out of time, and frankly, I'm not sure if I need to dive deeper on any of topics. If you, Jason, if you're thinking that I should cover anything, ask me. Or if you have questions in the chat, we can answer some.
Yeah, I mean, most of the questions have been getting answered as we've been going. Does anybody have anything that that we haven't answered that you'd like to re-kick up?
I can see somebody asking in the chat. That's like this random thing I've just seen, but somebody asking how complex can the formulas be, and that's an important thing to realize. Formulas are powerful, yet still that's a limited formula language. It's like similar to Excel, I guess. If you want to go really wild and you want to be complex, then you should just write a custom JS indicator and then use it as an input. This is not available right now, but we're going to deploy this functionality within a few weeks. And then it means that whatever you can do in custom JS indicator can become an input for your AI model. This is damn powerful, because if only because custom JS can use things like fundamentals, relative strength, or exotic data like news. Sky's the limit in what you can do in custom JS. And then once you feed your custom JS into AI models, now that's where it becomes interesting.
So in a few weeks, users will be able to utilize custom JavaScript indicators in the lab.
That's right, sir.
Got it. Okay. What about, oh, never mind. It looks like Brad answered that question. Cloud compute limit to how many models you can train over a set period of time.
There is a limit. There is currently a limit of how many models you can have being trained in parallel. Like right now, as far as I remember, you can only have 5 models being trained right now. But there is no limit for overall amount of models. There is a thing that's like more of a niche thing, but all models of yours are gonna be automatically deleted within 30 days unless you deploy them.
Ah, okay.
That's because the vast majority of models are going to look like that when you just start, and you don't really need them. You don't want to build up on them. And after 30 days, you don't even remember what was the idea. So those are going to be gone. And then once you deploy a model, it's never going to be gone. It's going to stay with you forever. We never delete it.
What about defining things like candle patterns or chart patterns?
Uh, right now, you cannot. Once you have custom GS, you can. So if you want to go with candle patterns, you would have to build a custom JS theme which uses candle patterns. But you get to remember that machine learning is still a complex domain, and an example, machine learning typically won't do very well with binary things, with things which are either yes or no. So you would probably want to transform your candle patterns into something else. An example, if I were to use hammer in my machine learning models, I would build an indicator which would be like candles past since last hammer. And
Mm.
this input will not be ideal. By no means, it has its problems, but that's going to be still better than just using a binary thing.
Could you also use like a formula, like defining close relative to low?
Yes, you can.
Mm.
Yeah, but that's like topic of using candlestick patterns in AI models is complex. You gotta transform this binary knowledge, like there is a pattern or there is no pattern. This knowledge is binary. You
Right.
should transform it into something which is first not binary, and then second not spiky, and which has values distributed evenly across the variance range. That's not that easy. So I'm not sure if we can just give an answer right now and give an exploitable answer right now.
We had a question asking if a model that's built on a low resolution, a lower time frame, then deployed on a higher time frame, can it work? I know the answer to this. Maybe you can give him a more thorough
Uh,
answer.
it can work, and the question is how good. If your model has captured patterns which naturally persist on bigger picture, then yeah, sure, it's going to work. Why not? Like there is nothing preventing you from that. But this model will learn some principles and correlation on your lower time frame. An example, you train a model on SPY 1 hour, it's going to train from 1 hour data. And then if you run this model on a daily time frame, it's going to be applying the same principles it learned on 1 hour. So the odds are it's going to work. There is nothing like no roadblock here, nothing breaking it. The idea is viable. You should try. It just boils down to whether you believe that you can learn patterns on a lower time frame, and these patterns persist on higher time frame.
And I can attest to it does work. If you build a strategy on SPY 1 hour, the next step, like once you've got that strategy kind of dialed, the next step is to pop into the variance explorer and
Yeah.
test it on
Yes, sir.
test it on every time frame you're interested in, test it on other assets. I was working on one yesterday that did great on SPY, but then I found out that it actually did wildly better on the Qs. So it was trained on SPY 60-minute data, and the best result that I found was 90-minute on the Qs, which is really exciting discovery because clearly the model
Beautiful.
yeah, it was like diverse enough that it could survive on alternative assets, different assets.
Yeah, what I would say here is that SPY and Qs, those are still very much correlated. So
For sure.
Even with Qs, I would exclude training data set from your backtest
Yes.
range. But other than that, that's an awesome discovery.
John asked if he crossbreeds models on different time frames, what happens? You won't be able to do that, correct?
Yeah, you cannot do that, and the reason for that is that these nice strips, which illustrate importance, that's while the idea seems easy, it's not easy at all, and you cannot directly compare importance of models which use different data set or different signals. Those are simply not comparable. So if you just create yet another model just like that, but its signal will be RR of 2, then the fact that this input is important for like 100% for this model, it's literally strat means nothing for model with different signal parameters or different market. And that's why you cannot crossbreed models on different trained datasets, because crossbreeding does respect this knowledge for importance. And we cannot use this knowledge of importance in a naive manner, because we know it doesn't make sense across different things. So if you can see that RSI 7, an example, is important for this model, it does not mean that RSI 7 is inherently carrying sacred knowledge. It means that this particular model on this particular historical data set with RR3 and like model being KNN, it did pay the most of attention to RSI 7 when making its decisions. So it doesn't mean an example that random forest will find the same magnitude of value in RSI. It simply doesn't mean so. Like it might, you can see it here, but you cannot expect that.
Got it. And then any other, I don't know, any other like key tips, tricks that you can think of off the top of your head that we can leave folks with that they can go and explore this thing?
Oh yeah, be humble and be adventurous. That's what I would say.
Yeah.
Because the very fact that you can substitute for like skill using language model, like you can generate inputs using language model, and you can crossbreed models. Those two things instantly make experimenting quick. So you should experiment a lot, and you don't necessarily have to spend days designing inputs on every model. Like if you know what you're doing, you might. But if you're starting, be adventurous, be open, and ask language model for weird things and see what happens. That's what I was saying.
Awesome. Well, any last minute questions from anybody? Has everybody gotten everything that they were curious about figured out, at least for the time being? I do want to say, like, we are going to be spending quite more time exploring the AI Strategy Lab live with you guys. Myself, I'm still learning about it as well. So every day as I play around with it, I kind of figure some new little things out. We're gonna, yeah, Gary. So that's what I was getting at. We're gonna be probably going live again here pretty soon to just be live playing around and exploring and taking y'all's questions and figuring it all out together. Will we be providing models for subscribers? Well, currently it's not possible to share models. Will we
Yeah.
be able to share models eventually?
Yeah, that's a controversial topic actually. We do not want to get into this gray area of providing signals from black boxes, because I know that world of AI in trading, well, it stinks. We don't want to go there. So the odds of TrendSpider providing TrendSpider made models for users, the odds are fairly low. I cannot see that happening soon. But I'm thinking that we are going to allow people sharing their models to other customers on TrendSpider. This one, I'm thinking that we might do.
Cool.
But there is no hard decision on that yet. So don't hold me to this promise. I'm not promising that.
Okay. Any last minute questions? Gary says, please allow for
No,
sharing.
I can see why. That's why I'm saying like we're definitely thinking about enabling sharing across customers. I can see why, definitely.
Yeah.
Can an novice use this system successfully? Surprisingly, surprisingly, the answer is yes.
It's
Uh,
really designed for a novice.
yes.
That's really what it's built for.
Okay, I have nothing more to add. I mean, we probably should wrap up, I guess.
Ma, Madhu Sudan, you have a question if the AI model is available in your platform. I'm not sure what that means, sir.
If you build a model, if you deploy it, yes, it's available in your TrendSpider, and you can use it anywhere where you can use an SMA. You can edit to a chart, you can backtest using this thing, you can scan markets using this thing, or run trading bots, or create alerts, whatever you want to do.
All right, guys, we're gonna call it here. I want to give a big thank you first and foremost to Russ. Thank you so much for giving us your time and talking us through this and for building this really cool tool. I'm so excited to continue exploring it. I know everybody here is as well. Second, thank you to everybody who has joined up today and hanging out in the audience. We really appreciate you guys being here. If you're not yet TrendSpider traders, now is the time. 60 up to 67% off during our Black Friday sale. That deal is available through the weekend. And actually, really, there's no better a time to sign up than now if you're just wanting to play around with the AI Strategy Lab, because free trials are back for a limited time. They actually end on Sunday as well. So if you're interested in just kind of giving this thing a try, you can sign up for a free trial right now through this Sunday evening. That'll be your last chance to do so. We are going to upload this video to YouTube. It will probably take a few hours, but it'll be up at the very latest by the end of the day today. And again, just a big thank you to y'all for hanging out with us today. Big thank you to Russ for joining us and sharing his incredible knowledge with us.
Thanks, everyone. Take care.